Hi folks, it's Steve here again from the Forex Codes. What I'd like to show you today is my Forex trading templates. I use these every day and I make on average 0.5% a day using these templates. Let's take a look. Okay, this is my 5-minute template. Let's just go through what's on there. Everything has its uses, of course. Here we got the TFC. TFC stands for the Forex Codes, by the way. The cloud dashboard. This uses the Ichimoku cloud. It's my way of one of the ways I determine the trend. I can see at a glance on each of these currency pairs the situation of price and the cloud on all the time frames from 1 minute to a month. Now, if there's a red light, it means price is below the cloud. A green light means the price is above the cloud, and yellow means that price is in the cloud. Now, price below the cloud in red, downtrend. Price above the cloud in green, uptrend. So I can see straight away on all time frames, pound dollars downtrend, Euro Aussie on most time frames uptrend, Euro CAD most time frames uptrend, and so on and so forth. This is my at a glance. Now the same thing is here for the individual currency pair. I've got the Aussie yen on at the moment, and we've got the cloud Indy here, 5 minute, 15 minute, 30 minute, 1 hour. So I can see at a glance here for this particular pair what's going on with the trend as far as the cloud's concerned. And you can see it varies, it moves as time passes. But the idea of the dashboard is I can see all the currency pairs and everything at once. Next, the bottom is the TFC squeeze. This is very important to me because why do we need the squeeze? The market trades sideways and chops around 80% of the time. So it's only 20% of the time that the market is making directional moves. I call that conviction. And the idea is to be on the correct side of the market when it makes that move 20% of the time. And then identify entries. But we've got to be positioned first. So we've got to need to know the 80% of when it's in a chopping around sideways, and how and when it's going to move for the conviction part, which is 20%. And the way I do this is, can you see the red dots here? These red dots on the squeeze tell me the market's chopping around, low volatility, waiting to make a move. So when I see that and I get an alert that tells me, hey, Aussie yen 5 minutes, you've got a 5 minute squeeze building up. So I can then look at this. Now I want to know which direction it's going. Now if I look here, on the M30 and 1 hour downtrend, as we keep moving along, all 4 lights are red there, which means on the 5 minute, 15, 30 and 1 hour, the price is below the Ichimoku cloud. At this time you can see this candle's red, and more on this shortly. And we're going to be breaking a low here. There, there and there. For me that's a short trade because you've got your compression here and then conviction when this starts to move, which is here. In other words, you get the 4 lights there. Now as a more conservative, You might wait while the 50 line is broken, but I wouldn't on that. I'd take the trade about 56. But it goes as low as 26, 27. So there's a possible 30 pip, 20 pip move on here. 5-minute chart, I tend to take 10 to 15 pips. But that's based on the squeeze. Let's just have a look at some other pairs. These are alerts, by the way. I hope they don't get on your nerves like they're getting on mine. But they're telling me certain things are happening. Okay, let's have a look at the euro dollar. Now here, can you see the red dots? That's telling us we're getting compression. And as you can see up here, we've almost got a box here. Look at the compression. And while this compression is going on, most of these candles are red, most, and they're below the wave. More on the wave later. So we're waiting for the breakout. We're waiting for the breakout. Now, I want everything to be red in the cloud, which is here. See all the four? So the trade short is a break of the low here. Now these are marked out for you. I'm going to go into this shortly. And then you've got the short from the break of that 114.22, 114.20, and the break of that. And you can see it goes well below 114. In fact, it goes down to 84. So 20 pip move, a 40 pip move, best part of. And all we got was the warning there's a compression, and we're waiting for the conviction. In other words, we're waiting for the volatility when it breaks out of that compression and fires off, which it did there. Great trade. Any others around today? Let's have a look. By the way, I haven't spec'd this. We're just looking now. Let's take a look at New Zealand dollar. No squeeze there. We had one there. But at the time, no. You couldn't take a long squeeze there because you've got to wait for this to be broken here. Just thought I'd throw that in. Dollar CAD. Here we go. You've got your squeeze building up. Takes a while for it to show conviction and fire off, but there, look. There. Anywhere there you can go along, and that's a fantastic run up. But again, it starts with the squeeze. So in later videos, I'm going to go into each individual indicator in absolute detail. These are just briefs, but I've given you an idea there. So that's that one. The next Indy is the TFC dashboard, which is here. Now this shows us the average daily range, amongst other things. Again, I won't go into detail, but I need to know how far of the day's range that a currency pair has gone. For example, the weekly average daily range of the dollar CAD is 62 pips. The monthly average daily range is 72 pips. A short while ago, as you can see here, the CAD went to 132.72. 116 pips. That's almost double its weekly average daily range. Absolutely exceeding its daily range. So when it got up here, and I looked at support and resistance here on the 1 hour, let's just on the 1 hour here and on the 4 hour, can you see how it's not, this is a resistance level on the 4 hour. So it's reached that level and it's massively overbought. So I took a trade short there. Very rarely do I take those kind of trades, but if something massively exceeds its daily range and it comes to a very important resistance or support level on a high time frame, then I will take a counter trend trade. You can see that, so today's 116 pips, yesterday it did 55. There are other things on here. For example, I want to know how far away price is from the 34 moving average. Again, this is important to me. Very briefly, so I'll cover this in another video. 34 MA. If this is in blue, then price is above the 34 MA. You can only take long trades. If this is red, price is below the 34 MA. You can only take short trades. That's when you're trend trading. Also, when price gets 35 pips or more above this wave, the 34 MA wave, when it's 35 pips or above, it tends to want to revert back to the mean. So if it's gone 35 pips, I'm unlikely to take a long trade unless it pulls back somewhere towards the 34. I hope that's pretty clear. Other things are pips to the swing low, pips to the swing high. Again, I'll cover it in a later video. Very, very useful piece of kit. For example, you know, if this has reached 80 on the daily range, you know, I've got to think very hard that I want to go along there because it's exceeded the monthly average daily range. Okay, this time it did it, but that's not a high probability trade. The high probability trade was watch where it got to resistance and then shorted. Next is the TFC tricks. You can see that on here. It's either green or it's red. The importance of this, it shows possible early trend changes on a cross of the faster tricks, which is the thick one, to the slower tricks, the thin one. I don't trade against the tricks. So if, for example, like here, there's a squeeze, the cloud is green, both trickses need to be the green. If it's just the fast tricks, that's a more aggressive trade, but both trickses need to be green to show that the faster trend is moving the right way. I won't take these trades if both trickses are red and everything else is green. So the tricks is used in conjunction with the cloud. It's straightforward, it's just a glance. It's color coding. That's a long trade there. As soon as that goes through the wave here, you've got your light green candle, your 4 light green clouds, your 2 trickses and your squeeze. That's a long trade, and that would have been successful as well. Just a quickie here, some people might say, well, why haven't you taken the short squeeze there? Well, I haven't taken the short squeeze there because the M30 and H1 are green. Everything has to be red or everything has to be green. It's color coded. Here on the dollar yen, you might have taken that short squeeze there. Everything's red. Everything's red here. However, as price starts to fall, and it's still falling, can you see the fast tricks here goes green? So even though price is falling, you're thinking to yourself, hey, be Jesus, I've got to be getting out because the fast tricks are already showing that the trend's possibly changing. Can you see that? Price is still falling, but this is going green, so I'm out. Euro yen 5 minutes. There earlier on today, London Open, you got a superb, fantastic short trade. Red candles through the wave, all 4 cloud, both trickses, and the fast tricks crossing the slow tricks, and you've been in a squeeze for a long time. This market's been compressed and ready to shoot. So that's there. Now, then you get something firing off here, but you can't take a long because these two are red, and almost immediately tricks goes red. So there's no long trade there. and it stays in the wave and then back down it comes. And while it's in the wave, you've got the squeeze showing the lack of volatility, and you can take it as soon as all these go red anywhere here. You can take it, but you might wait for the break of here or the break of the 50 line. Again, good trade. This is solid stuff. So that's the tricks. It's got to be on our side. It's got to be green for longs and red for shorts. You know, I'm a great believer in trend trading. And you've got to be able to see something at a glance. Now, we've mentioned Ichimoku, which I'm told in Japanese means at a glance, so that's quite handy. Red or green. We've talked about the tricks, red or green. We've talked about the squeeze. And what I want to talk about now are the TFC candles and the wave. Okay? Because it's all about trend trading. I need to see straight away what kind of trend I'm in. Now, with these, red candles mean price is closed below the wave. Blue candles mean price is closing within the wave. And green candles means price is closing above the wave. So when I see red candles, I'm thinking downtrend. And when I see green candles, I'm thinking uptrend. But everything has to go together. So here you've got your green, you've got your red candles below the wave. We're looking downtrend. And then you've got your red cloud and your red tricks. You're in the squeeze. You're in the low volatility squeeze, so you know with 80-90% accuracy the squeeze is going to fire off, and you're going to get the conviction short. Can you see how this pulls back to the wave? This wave often acts as dynamic support and resistance. So red pulls back to the wave, goes into a squeeze again, and bang, comes down through the wave, all red again, with your cloud red, your tricks red, and your squeeze firing off. So candles above the wave are green, in the wave are blue. Blue means indecision. Below is red. Now, it's all about trend trading. So look, if you can't work out what the trend is, ask an 8-year-old. If you haven't got one, borrow one from next door. It could be a 6 or 7-year-old, but say to them, look, red candles below the wave means it's a downtrend. Green candles means it's uptrend. Blue candles means it's nothing, sit on your ass. And I'll tell you now, that 8-year-old will be able to tell you exactly what the trend is. 90% of traders don't seem to be able to work this out, which is why I make it colour-coded and absolutely at a glance. There is no denying here that that's downtrend. Back to the wave, downtrend, and you've got other tools in the arsenal to show you when to get in. So you immediately, by looking at the TFC candles and the wave, know the sentiment of the market before you even look at the other tools. So I'm going to go into every indicator in detail in the next few videos. But look, if you've got red candles, you're not going long. If you've got green candles, you're not going short. Do that and you're going to save half your losses. Absolute fact. I've changed to the euro pound. Can you see it comes through here and goes into a downtrend, comes back to the wave, goes down, back to the wave, goes down, back to the wave, goes down, back to the wave, goes down. That's the downtrend, and the wave is dynamic support and resistance. You can see here you've got the compression, the low volatility, and then everything's red there through the 00 line there, and you can take a short trade. Nothing wrong with that at all. This was the ES 500 earlier on today. It's indicating squeeze territory here. Could have gone there, but you're waiting for the, obviously you're waiting for the break of that low there. And you get it here, red candles below the wave. Everything in the cloud is red. Your triggers are red, and away you go. Again, it comes down, goes up to the wave, comes back down again. One final look. Here's gold, up to the wave, up back to the wave, up back, and so on. Squeeze on gold here. Everything goes green. Your tricks, your cloud, your green candles, and away you go. You probably wait for a break of this. I'll go on to what this is in a second. Goes up, retests, and off it goes again. But there's your long. Okay, this is the Aussie dollar. Came into a squeeze here. That's low volatility, waiting for conviction. And we can see all these are now red candles. Everything's red. Break of that low. Here, you can go short. What's this? I have two yellow lines. This one is yesterday's low. Now, yesterday's low and yesterday's high are very, very important because the major support and resistance levels, as you can see, the Aussie dollar, this is Aussie dollar by the way, against US dollar, a quite convicted move came through, but when it came back, yesterday's low acted as resistance, and price wouldn't go back into yesterday's range. It stayed under yesterday's low, and off it came again. And of course, once you know it's not getting through yesterday's low and it drops off, you're waiting for the squeeze and you're taking the short trade. Let's just have a look at something else. This euro dollar, you can see this morning as a London Open shot through yesterday's high temporarily, maybe blew out a few stops there folks, and then instantly reversed, then came back to the wave, it's flirting with the underside of the wave, as you can see. All that time here you've got a lot of blue candles showing, as well as the red dots here, low volatility, waiting for the conviction, waiting for the breakout, and you know it's going to be to the downside because you got the red candles, you got the red tricks, you got the red cloud. Breaker there, you've got short. Then it's come down to yesterday's low. Initially, bit of stop hunting again, through it goes and back up, and now it's back at yesterday's low. Okay, and you can see it's done 87 pips today. The average range is on the week is 88. So it's done its range, hasn't it? Same thing happened with the New Zealand dollar. There's yesterday's low. It's come down, gone through, maybe a bit of stop hunting, we don't know, but it's faked a few people out, and then yesterday's low was held. Dollar yen, see along here, it's a fantastic support and resistance level. Initially held, then it shot through. Any more? This one is yesterday's high, so the pound card has come up to yesterday's high, bounced off it, gone up to yesterday's high, bounced off it, yesterday's high, bounced off it, and then eventually it's gone through. But it's flirting around yesterday's high. So that's that indicator. These little lines here are dynamic support and resistance. I like to use those as entry points and exit points. You can see the drawn in. Dynamic support and resistance. These are not some guessed lines. Support and resistance has happened at these lines in the past. Again, I'm going to go into each individual indicator. This video is getting long now. In consecutive videos. What's this in the top right? Aha! This one is another trend indicator. You can have it on or not have it on, but it indicates an 8 and 21 moving average crossover. So when it's red, the 8's crossed down below the 21. When it's green, it's closed above the 21. Like anything else, the best trades long are when everything's green, including the moving average dashboard. Okay. Other things. These are sweet spots. That's the double O sweet spot, like 170, and this is the 50 sweet spot. These act as support and resistance. Look here, double O's. Oh, go away. Down here, double O's. Yep, support and resistance. It's acted there. So I'll leave those on because you might use them as targets to get out of trades. Okay, now this is very important. This is the TFC, the Forex Codes currency strength meter. I've got this on a. You can use this stuff, and all those indicators I've shown you can use on any time frame, and they will work for you. I tend to work 15, 5, 1 minute, because I'm trading to my personality, and you have to trade to your own personality, and that takes screen time and practice. Currency strength, very important. I want to know quickly which currency strengths on any time frame I'm using, which currency is strongest and which are the weakest. For example, here the CAD is at the moment on the 5 minute, the CAD's strongest, the yen's the weakest, right? On the daily time frame, New Zealand dollar's the strongest, CAD's the weakest. But even though the CAD's weakest on the daily, today the CAD is the strongest in the last in the 5 minute time frame. You can see here, the CAD has moved up and up and up and up in the last 5, 10, 15, 20, 25, 30, 35, 40. The last hour, the CAD's been moving up stronger, whilst the yen at one point was moving lower. See that? We know, as we said at 1720-ish, there's a turnaround. That the CAD gets stronger, the yen gets weaker. So if you're thinking of getting out of this trade from the squeeze, look at this. At this point, yen starts getting weaker, CAD starts getting stronger. Time to go. Can you see the usefulness of this? This is the currency strength meter. I've got a 5 minute. I've also got it on a 1 minute, and I can see quick changes on the 1 minute. If I want to do a quick scalp, I would want to see something moving very quickly. Let's see this dollar moving there and the pound moving there. That would get me a quick scalp. So that's the TFC currency strength. Phenomenal bit of kit. And you can see how all these things work together. Right, what else can I show you? By the way, just a quickie. You can take the grid off if you want. You might find that easier to see. It's just that with the grid on, like here on the 1 minute, I can see how far back things have happened, because this is 1 minute at a time, and the grid here will be 5 minutes at a time. But it's up to you. A couple more things I want to show before we move on. See the cloud dashboard here, the TFC cloud dashboard. You don't have to have lots of currency pair time charts open, because look, if I want to go to the dollar CAD, I just press there, dollar CAD, and up it comes. See? Back to the 5 minute. I've now got the pound CAD. As you can see, that's in yellow. But if I want to go to the euro CAD, just press euro CAD, and I've got the chart here. So I don't need loads of charts open. Thought you might be interested in that. Let's have a look at a 30 minute chart. This is dollar CAD, 30 minute. Now, you can see you've got a squeeze there. Now, for an aggressive trade, you can take 3 out of the 4 greens. You see it doesn't go green there till there. So textbook trade is there at 15.30 when it goes through yesterday's high, right? This is longer time frame, 30-minute chart. Perfect trade, fantastic trade. Okay. Let's have a look at Euro Aussie. Again, just press that, get Euro Aussie. Squeeze here. Wait till you get the 4 greens, which is there. Just through the 56.50. There. Great trade. Okay. Euro CAD. There. Any of those give you the trade. That's London Open. Squeeze. Tricks green. All these green. TFC candles green. Up you go. Great trade. Another one here. See? 30-minute chart. So if you want to have something a bit more leisurely, go to the 30-minute chart. It still works. Okay, I want to show you something really sexy now. Right, please be aware I've turned the alerts back on, so you might get some alerts going off in the background, but I just want to show you something. Now this is the TFC squeeze radar screen. Now some of these indicators I've shown you today are indicators I've developed that are just not available anywhere else. You know, over my 15 years of experience, I've come to develop these, have them coded, some of them, and spent many years using them. Now the radar screen is simply this. If you run a single currency like the euro dollar, you can watch for a squeeze. But what about all the squeezes that are happening on all the other time frames? Sorry, on all the other time frames and all the other currencies. What the radar screen does is pick your currencies, like on the left hand side here, and pick your time frames, whichever time frames you want, and it will alert you when you get the red dots, like for example here on the dollar chef. All these are fired off. In other words, the white dots are in now, the squeeze is fired off. But this squeeze on the hour has got 8 red dots on it. That means it's been a squeeze for 8 hours, which means it's been on the hourly chart, very low volatility, like a coiled spring ready to go out. So maybe worth keeping an eye on the 1 hour chart to see which way the dollar chef will go. Now, what I also love is a squeeze within a squeeze. Now look at this. The pound yen has got a squeeze, it's got red dots on the 4 hour. It's got 33 hours of red dots on the 1 hour. 5 red dots on the 30 minutes, and so on, and even on the 1 minute. You got squeezes within squeezes. These are coiled springs on all these time frames, ready to just go wallop and show conviction one direction or the other. Unfortunately, with the pound at the moment, because of Brexit, I'm not sure I'd trade one of those. But here on the Euro Aussie, you've got a squeeze within a squeeze. 5 minute. Sorry, 30 minute and the 1 hour in a squeeze. So when this does go, it could go with some power in one direction or the other. So just put your Euro Aussie on your charts on the 30 minute and 1 hour and have a look at the tricks, the Ichimoku cloud, and the TFC candles, the wave, and see which way this thing's going to go. Okay? So you can tell on any time frame for any currency pair at a glance. Remember, we're talking about this thing at a glance, and that's what I want you to see, color coding at a glance. So this is a squeeze radar screen. So you will get an alert like this, fired off, dollar yen 1 minute. So then you go to the dollar yen and have a look, see if it's worth a trade. And that was 3 minutes ago. And you might even go to the TFC currency strength meter to see if the Aussie and the Japanese yen are going in opposite directions on the strength meter, then you might take a trade. But you'd look at the wave and the candles and look at the colours. Are we talking green? Are we talking red? Okay, takes practice, but you get to know it. Right, this little thing here is a TFC profit machine, profit meter, profit and loss. Now, I like to go for 0.5% a day. If you like, 22 days in trading month, say 10% a month. People say that's impossible. It's not impossible. 0.5% a day is possible. Now this, I put 10 grand in an account to show people with small accounts that this can be done, that you can make money. So let's have a look. 3rd of October. Okay, not even 2 months, 6 weeks. 3rd of October. 3rd of October. And in that time, since 3rd of October, the account is at 15.5%. So that's well over 0.5% a day. Today I've done my 0.5%, but I'm down on the week. See, I could have waited and got profitable this week before I did this video, but I want to show you warts and all that you don't win all the time. However, this month of November, I'm 9.5% up, so I'm less than 0.5% of getting my 10% for the month, and I still have 10 days to go. Not 10 days, probably 6 trading days. So I should make the 10%, yeah, which would push that to 20%, hopefully. So I'll go for 0.5% a day. On Friday I did 3.5%, Thursday 1%, Wednesday 0.87%, and so on. Just got a bit behind this week, making too many bloody videos. You don't trade with distractions, no excuses. Today I just did a few as you can see, a few scalps. Euro pound, ES 500, Euro Aussie, a bit of gold, but they just little trades. I did that CAD trade. I should have held it longer, but that's one of my things. I don't hold my trades long enough. That CAD trade, when it went over its average daily range by miles, I took a short there, got a little bit there, and so on. Bid on the ES again, and the dollar CAD. I went again on the dollar CAD. So, yeah, very happy with that. This you keep an eye on. Make yourself accountable. Show people this so that you become accountable. I'm showing you so that I become accountable. Okay, right. The video is long enough. I'm going to make separate videos now on every single indicator you've seen today and tell you how it works. Okay, here's another alert. 5-minute squeeze on the Euro Aussie. So I'll just take a look at the 5-minute squeeze and so on and so forth. But we'll go into more detail on other videos. Now I hope you realise that's really useful stuff, and there's lots more to come. This is a new channel. I've been trading 15 years and I've just started and decided to share some of this stuff. So share this video, subscribe to the series. A lot of this will be new stuff, new to you. All I'm interested in trading is making money, right? Making money. So until next time, maybe tomorrow, certainly the day after, remember, how you do anything is how you do everything. Take that to heart, and I'll see you soon.